Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is the amazing gains realized on yesterday. Of course, today is the 3rd day of August, Wednesday. Tuesday was a huge down move, complete technical breakdown in the S&P 500. We're going to look at that in a second. Complete decimation of many stocks. Certainly of the market. Of course, the market was really only down about 2 to 3%, depending on what you look, but generally we really as a firm enjoy these down days because, yeah, our larger portfolios take a hit. They're long stocks, but certainly we provide not only the speculation here for speculative traders, but we provide hedging for larger portfolios. Again, that's why we always recommend 10 or 20% of your portfolio go into what we do, risk speculation. And yesterday was just a perfect example of how we make you money while your other investments, the other 50% of stocks that you have in your portfolio, may be losing money. So, looking at the MSA-UDT, this portfolio has been a market leader, or a portfolio leader of our key primary portfolios that we look at, a relative outperformer, and now you can see another 46.4% gain on Tuesday, the 2nd day of August 2011, when we had the complete technical breakdown of the market, particularly. We're going to look at that in a second. So over the last 135 days, the gain is now over 200%. So really impressive has been the portfolio, and that's just the outstanding portfolio. The Delta DTS 15K is up, as you can see right here, 143%. Actually more in dollar terms, 21,467. So, ergo, since you can actually trade this in a high risk situation, in other words, even though the margin may be only 3,000, you're only going to have about $7,000 in drawdown. That would be a 50% drawdown, roughly, on the $15,000 account size, but this is pure risk capital, so your drawdown could at least be, or could be, $15,000. So you really have to pick your points. We wouldn't recommend getting into the Delta DTS 10K right now because of the run we've had. Yeah, we could go another 100% higher or so, but you definitely want to take advantage, add portfolios. Again, recently these portfolios, I think we're up maybe 80%. They had gone up to about 130 or 40%, and they came back down to about 70. I remember seeing 79% somewhere in one of the portfolios. A great opportunity to add exposure, and that, of course, is what we were informing our clients of our recommendation, to add exposure to these portfolios. Pick up another portfolio now that we've had this little retracement, and there you can see the new highs in equity, as we are standing at new highs for the MSA-UDT. The Delta DTS, if it were 10K, obviously would be up 212%, just barely besting the MSA-UDT. But there's the portfolio, $4,640 in gains for the $10,000 portfolio. $20,000 over the last 135 days has been the case, and we're actually... Here's some of our comments to the market. So we had actually been expecting this move in the markets. We had been mentioning that when you have the trend battling up against horizontal, let's just take a look at the charts, shall we? We'll come back to that in a second. So here's a chart of the intraday. We'll look at the daily in a second. Here's a chart of the intraday S&P 500 futures market. As you can see, we finally put in a test of the actual swing low. Again, we'll look at that in daily. The actual swing low is around 37 or so. The market actually came down to about 30. We definitely expected this flush out today in the market. A great buying opportunity. Here's a great buying opportunity. It hasn't really come to fruition yet, but it could. Great buying opportunity to retest the actual low. A lot of people are talking about the March low. A lot of people are talking about the June low, and certainly that merited waiting. But 1350, the market's going to completely break down its 200-day exponential, which is what we look at, and simple moving averages, the be-all, end-all, mother of all key trend following support resistance measures. It's going to completely break that down in a knife-like formation. You're just supposed to buy at 1350. No, it's not really happening. Definitely going to have a flush out, which is what we've had today. So actually a pretty good buying opportunity long term. We're going to go ahead and issue that as a great buying opportunity now, longer term for your portfolio, and of course longer term that is for the remaining 50. Let's say you're 50% invested in stocks. You definitely want to get long some of the relative outperformers. Check with your portfolio advisor for those recommendations. But in terms of the market, definitely a pretty good opportunity, even though we've completely broken down the very significant level of support resistance from a trend following perspective. What's more, we're certainly below the trend. This could be a V bottom. We're going to have to get above this key level around 48. Well, actually, we'll just call it right there. So we'll call it 48.50. Once we get above 48 to 50, we might get encouraged about a continuation move. We may look to add longer exposure. If we break down and don't bring this formation to material, then certainly you definitely want to be selling again. Beautiful opportunity participating on the short side this morning as the fear finally came into the market. It really had been a little bit absent, which definitely was suggesting that the market was going to make the new lower lows, given that the fear hadn't really spiked. The VIX was up, certainly. Equity per call ratio was up, certainly, but nevertheless wasn't quite to the extreme that one would expect, given, again, the complete technical breakdown of the market. Can't stress that enough. And really, in reality, the states of the United States of America start to go bankrupt. They're on credit watch, about 6 of them. I mean, what the federal government obviously was next, but it was kind of the way it was handled between the bipartisan parties. The bipartisan bodies just really handled it poorly. A lot at stake here with the entitlement programs and so on and so forth, but that was really handled badly by our government, by Washington, and the whole world took notice. The whole world took notice and said, what's going on here? Yeah, this is pretty ridiculous. Not only are they in extreme dire straits financially, having to raise their credit limit because they're just overspending. They're just spending, and but then they can't even resolve it without this. I mean, it's absolutely just one of the worst things, and no reason that the market didn't break down technically, but all that could work itself out. Certainly, again, a great buying opportunity. We'll take a look at the daily chart, but back to the intraday here. Definitely looks like bearish. Bearish. Look at the beautiful accelerating bearishness yesterday. Look at the bearishness that we saw. A little bit bullishness in the day. Look at the bearishness. This was the complete fake out, the bull trap right there. And this was actually the look at that knife-like move. That's a waterfall. That's a waterfall decline. Simply the precursor to what was to come, given the extreme bear. There's no reason to buy. There's still no reason to buy. Again, until we get above 48 to 50, we're going to go ahead and from a free informational day trade perspective, call out that trade, buy, let's say at 51. Buy the market at 51. Who knows how far it'll go. Certainly hold until the close if you want to do the swing. Do the swing. We're going to go ahead and look at actually the chart of the daily. We'll minimize this. So there's the daily. That's actually the spider. Same thing. Look at that. Actually eclipsed this low from March. There it is. So there's the low in March 2012, 125.28, and the spiders were just below that. Again, we got to get the flush out. We have to shake out the weak hands that were still holding on and didn't sell in this complete. This is a key level we look at right here. We threw in this cyan, or this cyan line. We threw in this cyan line. Okay, that's great. But we don't really follow that. The market did try and hold it. There was a convergence, confluence. We got that beautiful spike higher. But look at the technical formation. We mentioned this trend coming up in the S&Ps, battling the trading range. This was going to constrict the trading range. It's going to be a coiling formation to where you were really going to get a significant break. That's exactly what came to fruition. We had been informing our clients of the likely breakout of the trading range. We, in this space, in our free market and trading video, had mentioned we were bullish above 1300. Well, that level was broken on the 29th. 1293 was the close. That level was broken. No longer bullish. Weren't going to bearish until we got the complete breakdown in the market yesterday. Complete severing. Bearish below 1280, I believe it was, in the S&P. So this trading range really didn't hold. We actually had the trading range arguably from 1300 or so. The market just simply, as a trend came up, you were going to get resolution to the top or to the down, and the market has definitely chosen to the downside. Having said that, this is a good buying opportunity, relatively speaking. If you look at the support that we've had. We've actually tested that low back in March. So we really need to be looking at let's just pause the video real quick and we'll try and find what we need to be looking at. Okay, we're back. Sorry about that. We had to pull up a chart of the daily. We had actually moved over a lot of these workspaces to a different computer, so we're having a little challenges looking at all the same stuff that we usually look at, and but it's going pretty well, I think. And so here's what we need to look at. Obviously, here's the breakdown that we mentioned. Complete breakdown of our key measure of trend following support resistance level, the be all end all. We actually use these two in concert. So this is a full trend bearish, even though it doesn't read it. This is a full bearish perspective. We actually retested that morning. That was the bull trap. Retested that. Beautiful selling opportunity. Again, this is our key measure of trend follow, or this is our key, for our intents and purposes, how we gauge the market for the intermediate term. This is longer term. Even longer term, we mentioned this is a great buying opportunity. Well, that's simply because of this level of support there. There's the aforementioned 37.75 low on March 16th. We knew we were going to hit that today at least. Got down to 30.25 actually as some fear finally spiked. Again, we mentioned the flush out. Good buying opportunity. Definitely good buying opportunity. Having said that, it could be more ideal. Out of 5 stars, that's 3, maybe 4. We'll call it 3.5 stars in terms of a buying opportunity. Excuse me, actually we can call it 4 stars, because it is a great buying opportunity. Having said that, we're completely oversold. We've moved 100 points in the market in about 8 days, 9 days or so, and that's a big move. So statistically, in terms of regression, that's a pretty significant buying opportunity. So again, we'll call it 4 stars buying opportunity. Buy at 40 on the market. The problem is why it's not 5 stars. Any other time it'd be 5 stars. If we're higher, if we'd made a new high, the problem is we made a new low, a lower high. Right here, we made a lower high, then this high, lower high, and then that's really the reason you get the complete technical breakdown from momentum, completely bearish, both now intermediate term and short term. Directional movement, both short term and intermediate term, bearish. The price technicals, bearish. The trend now, fully bearish. So really, that's a 3.5 star trade. That's a 3.5 buy. You really have to buy just for the snapback and actually just have a quick stop if you want to do a short-term trade. Definitely want to be buying the market, certainly as of 50 or so. And depending, it all depends on your time frame. Again, longer term, it's a great buying opportunity. Should we get down lower, we're going to seek to gauge the market at that time, but right now we are at the former swing point low, so that's why you're seeing this this nice little bounce back that we've got in the market. Having said that, again, we need to break above this trend because we're full all out bearish. We have this one bullish indication, bearish, 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 price technicals bearish, and again, if this fails, that could be even more bearishness, so we could definitely head on down to 1200 pretty quickly should this formation not be realized as a bullish formation. Could be a V bottom. If we break back above that, definitely want to be buying, and ergo that triggers the longer term. We'll say buy at 50 or 51 for both long term and short term right now is bearish. Definitely want to be selling the market if you're going to be trading. And you can make some good money on some of these quick moves. But we've spoken way too long. We actually reversed everything, and we spoke about our portfolios. How have our portfolios been doing? Well, there you go. We spoke about those. 200% really capitalizing yesterday. This was August 2nd on the market. 5,000 That was the Delta DT. That's MSA UDT 5,000 on the Delta MSA at 52%. That was last on the 27th day of July. It was up just a little 188%, had a bit of a drawdown after that. Now up 207% with yesterday's $4,700 gain. If you're interested in auto trading this portfolio, go to the website, chat with Support Team Live. If you're not already at the website, you can just go ahead and click on Ask an Analyst. If you have any questions about the markets or your portfolio in general, is purely for informational purposes. Having said that, if you have any other questions, shoot us an email to admin@MiniAnalyst.com. And hope you guys are enjoying making money on the downside. Hope you are making money on the downside. Nobody enjoys the market going lower except for traders, putting up 200% gains in 135 days, and that's what we do. So it's a great time to get involved. Again, we look forward to seeing you. The portfolio is in full automation. Takes about 5 or 10 minutes to open the auto trade account online. If you don't already have an account with one of the major futures brokers that we do work with, it's full automation. The broker sets you up. All you have to do is have an open account and funded. The broker handles all the rest, including the account setup, the addition of the portfolio to run in full automation, separate certainly of your computer, not the old days where you had to have your computer, or even the older days where you had to receive alerts. These fills are given to you almost instantaneously, and there's a lot, again, let's read, I believe there. Are you still missing out on this portfolio, which costs just $1,576 per year? $1,576 per year, and it's made over $20,000, 135 days. If you actually go to MSA UDT, click on MSA UDT, add to cart, $788 you can get in for just 3 months for the MSA UDT. $788. If you'd have done it last week, you would have made $4,800 yesterday or so. You do have to have 4 to take advantage of the, we'll just delete that way. You'd have to have 4, and you can enter promo code year, actually, is the promo code, and it's already been applied. $1,576. You save $1,576, not $3,152 for the year. $1,500 for the year, and what's more, you save another $2 a round turn on commissions. So great deal, great opportunity. We look forward to seeing you.